Director General, ladies and gentlemen, thank you very much for this really great opportunity, and it's really an honor to be here to present you our recent economic outlook, of course, which is always a work in flux. So still today, probably we would see some things a little bit different than 4 weeks ago, or 3 weeks ago. But this is not the issue today, and I will for sure also we can enlarge, of course, on the recent developments, and I'm very happy also to especially touch on those issues which are related to the trade and globalization debate. So, with every economic outlook, we are doing a kind of a special chapter, and this time we really devoted the chapter to the subject, Make Globalization Work for All. And I'm very keen also to learn from the European Commission and the audience here what you think about it, and where probably further refinement will be necessary. And of course, as Europe is always an important stakeholder, all European countries, or most of all, are members of the OECD too. I think this is a nice audience here to really check our work with you. So, giving you the key messages, I will not walk through it, but there are 4 main areas. So, first of all, this is our understanding what is happening with global growth right now. So, we expect a pickup, but with a bit still upside risk, but I should also mention some downside risks. I will come to that also in a minute. Then, of course, this is a mantra of our recent work. We are very, very keen on the issue of productivity, because we believe that productivity in the end is really the final element for at least a lot of advanced economies, aging economies, how to keep the promises we do for the old generation and also to keep the future open for the young generation. And of course, given in a lot of European countries still super high youth unemployment, I think this is really key ingredients for all of most of European countries to look about productivity. But this is the entire source of growth if you are not in the lucky situation to be full of natural resources, where only few are that lucky. So, but more needs to be done to share gains from structural trends and trade, and this already reflects the special chapter. And last but not least, the OECD is now really looking on integrated policy approaches. And integrated policy approaches mean that you see a lot of structural reforms in connectivity, so structural reform packages linked to a well-defined, also using all the macroeconomic potential you have on monetary. Of course, here's for the Eurozone, it's the ECB. But also looking at the fiscal policy, what you can do with fiscal policy is very important. And then it's not just about policy settings, right structural reforms, also related to our other big flagship, which is the Going for Growth report, which was released in February. It's, of course, also related to the issue we will also come back in the trade chapter. This is about the issue of equity and inclusiveness, and I know this is a big agenda also for the EU. So, we see right now, if you look at the bottom here, 2016, that global growth will pick up. We believe it goes up in 17 and 18. So it looks good, and especially our real-time indicators at the margin of what you can know are still pointing upwards. So we have quite a good feeling here, and this is why I said in my beginning that also there are even some upside risks. So it can even be better. And but if you look then at the average from 1987 to 2007, you see that we are rather well below this average. And of course, this average, again, this is not the same as we talk about productivity, which is also declining since 2 decades, but even the actual is below. And if you link this, I will not show a graph on that, if you link this on a kind of a secular coming down of productivity for most of our countries here, this really creates a problem I just mentioned. So, if we then tried for this also, we used some new graphs also looking in GDP growth per person. And here you can again see the averages. The black horizontal lines are the averages again, 87 to 2007. And then you can see the average 2016, and you can see that if you compare this to the red bar, if you compare this now to the projection period, which is the blue bar, again here you see for the euro area, especially if I highlight this here for this purpose, you still see this is not just what we used to have, and even the average we used to have will probably be too small for taking care of the future challenges. On the right-hand panel, we have also the issue of income inequality here for the OECD, but which encompasses, as said, most of the European countries. If you look at the top 10, you will see a strong growth. It's an index here, 100, 1990. So you see what's happening with the top 10, you see what's happening with the mean income, and you see what's happened to the bottom 10. So there is clearly a sign for income inequality. And of course, this has to be related really to the policy agenda. So it's not just about growth and productivity. It's really about the nexus also of growth and productivity with inclusiveness, which would mean that in principle all groups of the income distribution curve would participate in the gains we have from rising growth and productivity. And we cannot be sure that the upswing we are now expecting, and maybe it's even stronger, but we can indeed expect that this will not be really distributed equally. So I will not go into these figures. I think this is what you probably have already taken from the press. This is just here for stock taking. So, and we see especially, we are looking in the short term, we are looking at the confidence indicators. And they also, as I said, picking up. The red line here is consumer confidence, the blue line business confidence, and you can clearly follow up what happened after the peak through the bottom, 2008. And then you can see on the right side performance of confidence indicators, and here we did OECD and the emerging markets, the BRICS, and we here try to do a correlation between the consumer confidence, business confidence, and we'd like to link this to the real activity. And here you can clearly see, especially the consumer confidence indicator has lost a lot of impact. So it really is not very much in line anymore, which is happening in the real economy. So, and this of course has consequences for our forecasting system. As for sure, I'm sure that the Commission people are also looking at that and rather take that serious. So we have to be aware that even some confidence indicators are not really that well working, which is also a cause of concern, and to do it better. So investment is increasing. This is also true. But the capital stock, nevertheless, is getting rather old. So if you look at the productive capital stock growth, United States, Euro area, and Japan, you see the year-of-year has gone up. It has gone up a bit, but it's still not really good looking. And so you can, if you look back again, do not have this slide here, at the productivity agenda, and if you see then that before the crisis, the coming down of productivity was mainly due to the loss on total factor productivity, which most of you will probably know that this is just a residuum, what you cannot measure. This is total factor productivity, and this is so important because this drives, in the long run, the whole productivity figures. So this is an issue here. On the right side, you see also what do we have on high-tech products. So there is an upgrade, but there is still more to come. So now looking at trade. This is a rather difficult graph. I will not walk into the details, but what you can for sure see that especially the euro area has really kind of recovered. If you look at 2013, the support of the euro area was rather weak. It was not that good in 2016, but then nevertheless, if we compare, I think euro area trade has really kept up or even increased again. Of course, you will still see an interesting development in China. You see that China is not giving so much contributions to world trade growth. It's still a lot of trade, but it's not so much contributing to the further growth. And here you see more in so-called, here's other Asia. We call it also sometimes dynamic Asia, which gives quite a huge support to world trade growth. And on the right-hand panel, just for documentation, you can here clearly see again China nominal fixed asset investment. And this is what you can see after the crisis, that it's not any longer TFP. Here it's now clearly a lack of investment. So investment is not enough, capital deepening is not making progress, and this means that your capital stock will be older and older, and there is an issue. So first it was TFP. So that does not mean we don't have to care about TFP. It will still be an important political trigger, but investment also seems to be a big missing issue, and we have to think about it, how we can amend that. And there are a lot of factors, of course. There's no one size fits all in that. So, labor market, just a short shot on the labor market. Here you clearly see unemployment, here OECD again, unemployment rate comes down. Marginally attached, still a bit on the high side, and also involuntary part-time. However, this is measured. I know there is a big measurement concept here and problems here. You can clearly see there is, so it's not that good looking. Of course, if I talk about that unemployment rate is coming down, you will still see, especially in some countries of youth unemployment, that it's still unbearable high. So, and also the wage growth is not that good, and this, of course, also important a bit for the macroeconomic performance. So, low wage growth will still keep some economies a bit in the deflation zone. So, stronger wage growth really linked to productivity, maybe for some countries even above productivity a bit. Some countries could afford that, which would also help to correct the imbalances we also have within the Eurozone countries. I think so there could be some issue there about real wage growth. So now showing a bit the risks. So there is still private credit risks in the EMEs, and you can see this here on the left-hand panel on the private non-financial sector credit. And especially China, which is anyway a bit of a black box because there is a relatively large informal sector shadow market for finance products, for credits to corporates. So there is an issue there, and the red line also gives at least some indication that we should really look very close. So then also not so much about real investment, which is still lagging, but you see a bit about bubbles building up, or at least we believe you see a bubble here, and there are at least also as one European, no Eurozone country, but a European country involved, and this is Sweden. So for Sweden, I think there is clearly quite a housing bubble, and there is probably really they have to rethink their macroeconomic policy, especially what the central bank is doing in Sweden right now. So just being fixed on the exchange rate risk. Maybe this is not the only risk they should be aware of. But I do not talk about any country. This was the exception to the rule. I already mentioned it. So inflation is generally still below objectives. And you may have followed the recent discussions about the move of the FOMC in the US. Already there was a big debate whether Janet Yellen is much too cautious now. And you know, for a long while there was a debate why they are too cautious on the high side, and now there was a discussion whether the Fed has been too cautious on the low side. So they waited a long time until they normalized their monetary loose monetary policy and unconventional monetary policies, and probably now they are a bit late in the cycle. Now they put it up, also probably to a reaction to some plans of Donald Trump, but now already economists fear, oops, this may be a little bit too much. So I think there is still an issue about monetary policy, and central bankers really, after all these years of stagnation of unconventional policies, I'm sometimes wondering, it's hard to call it, when do we call it normal again? What is really the zone of monetary policy being normal? So, okay, and here you can also see, if you look on the right-hand panel, for the medium-term developments, market-based expectations, overnight interest rates, the only area in the world where you can see something, which means that the markets would expect at least some coming out of this low inflation or deflation risk, is the US. Euro area and Japan market expectations are still flat or below the line. So now coming a bit closer, and I'm sure we will learn in a minute also from the Commission, the view here about trade. So, first of all, on the left-hand panel, we clearly see, if we compare 1995 with 2015, you have a rather interesting development when you can clearly see that, for instance, the OECD has lost quite a lot of, power in world trade. So, and on the other hand, China, dynamic Asia is really now more and more dominating it, and rest of the world is, of course, Latin America, US, Canada. So this is a huge shift. And then by type, here you can also clearly see manufacturing is more and more dropping out, the green line. And if you think about business services and financial services, they are going hand in hand, up and up and up. So, and this is a very interesting feature. We also looked at what will be the job effect, the job losses of this, say, increased trade. And this is about job polarization by country. And if, again, we can think about, again, compared to the job churn in normal advanced economies, the job churn or the job loss just due to trade is rather limited. Nevertheless, it may be very well felt in the people who are working in these sectors. It may also not just be real fact, it may just the fear that this is coming up to you, that globalization and trade will eat up your job. And this is already where we have to be aware of. And if we then look who are probably the most affected, then it is an interesting feature that it is the middle skill. It's not so much about the low-skilled employment. It's not so much about the high-skill employment. What is really squeezed out is middle skill. And middle skill still also constitutes, of course, in a lot of countries, large areas of the middle class. And I think the political orientation and the economic prosperity of the middle classes, this is still an entire feature of really, so also not economically, but also from a political economy, functioning economy. So I would very much highlight that feature, which means a lot of things for education, upskilling, and all that. So, and then, of course, here also to show that advanced economies have moved up the value chains. I do not need to tell you the value chain concept, and but also EMEs are moving up the value chain. And of course, as EMEs are moving up the value chain, as China is rebalancing and then also consuming some value chains, because they integrate value chains, so that value chains will be decelerating a bit. So we have not so much an increase of global value chains. We have decreasing. They're decreasing a bit due to China. This also is an interesting aspect of trade with some consequences. So this is an important issue, and this was discussed also by our committee. So what is really entire responsible for job losses? And sometimes it's attributed to trade, but we would do it a bit more sophisticated. What we clearly see, this graph is rather difficult to explain. I'm working with my team to make it more, quick, easy guessing graph. It's not like that. But what I can tell you, so it's of course about trade, but it's also about preferences of consumers. And most of all, it is also linked to technologies. So the link of trade, foreign trade, the link of trade, the link of consumer preferences from manufacturing to services is one. So you don't buy the third fridge in your house or something like that. And of course technology. This is really driving job losses. So we have not just to look at trade. If we really have job churn, want to locate it, it's also preferences and technology, which then opens up the whole digitalization debate. I do not need to tell you that. And then what we also see, and this also feeds, of course, into populistic voter areas. And if you look at Brexit, if you look at Trump, if you look at Le Pen in France, you will clearly see where concentrated populations, say mainly dominating middle skills, and where in regional areas where, for instance, manufacturing is concentrated, these are exactly those regions who then also have this voting result. So there's regional concentration also as an important factor of political unrest. So, and therefore we can say that also countries with larger falls in manufacturing jobs also increase regional inequality, because regional policy is not kicking in at the very moment. Yeah? So there's a lag of a policy response, and then you have this increased inequality. So, and now an integrated policy approach. I will be now a bit quicker here. So, we have the going for growth, and we can also see we make recommendations also along a line our diagnostics. But we unfortunately here see that the reforms undertaken in relation to reform recommendations for OECD countries not so good looking. So from our point of view, it's about intelligent macro, but it's even more about taking up the structural reform agenda now. And on the right side, I just mentioned some: pursue open markets, preserve institutions and standards, combat corruption and illicit trade, and others, just to mention, which is also, of course, an ingredients for not just free trade, but fair trade, which is also, in some political debates. I'm a German, as was mentioned, and the fair trade issue is a big issue also in Germany. So, and of course, again, here our last vintage of going for growth recommendations. And here you see we're looking at growth, but we're also looking at inclusive growth. And you see here active labor market policies, labor tax wedges, tax structure, competition, human capital, and research. You see it's rather, the best looking is research and development. In all other ones, the performance is not that super great. So here's some countries. I won't go through that. And here, so this is the final thing: act to strengthen inclusive growth and make globalization work for all. And this is the two big areas where the OECD would like to work on, also probably as much as possible in cooperation with the European Union. You see, Brussels and Paris is very close. We have kind of a good advantage to get together about international policies and, of course, about domestic policies. And I thank you very much for your attention.